Hello guys, you're highly welcome to this series of the video where we'll be discussing mitigation block. And if you're new to the channel, please do subscribe and turn on the notification button. Without wasting much time, let's face the discussion. Now we'll be discussing the mitigation block in these three aspects, right? Defining it, the types, and we use illustration and charts to conclude the video, right? Now, mitigation block, mitigation. From the English word, you should know that mitigation simply means to reduce the strength of something, right? Now, in this case of price action, it is the reduction in the strength of price, right? That is to say, failing to take off maybe previous high or failing to take off the previous low. Do you understand? And the mitigation block is one of the 7 PDRA matrix of the ICT. That is to say, one of the institutional reference point of ICT, right? The mitigation block. So mitigation block is associated with a failed swing. While breaker block creates new POS, taking off previous highs and previous lows, right? Mitigation block does not do that. The swing always fail to take off highs and lows. So mitigation block is simply a failed swing. Now the types. For the types, there is the bullish mitigation block and the bearish mitigation block, right? Bullish mitigation block and the bearish mitigation block. Now use illustration and chart to help you better understand this lesson. Let me move this way and this way. For a bullish mitigation block, we want to see price crossing up, right, immediately after the mitigation block has been traded through. Now for a bullish mitigation block, this is a case whereby a swing that was a price movement that was creating lows, right? Now when it retraced back, instead of creating a low to take off this lower low, it failed to do that. If it is a breaker block, it would have traded through, creating a BOS here. But for the mitigation block, it did not take off this low as in the breaker block. Instead, it stopped here, right? It stopped here. Now the failed swing, the origin of this failed swing is here. The origin of the failed swing is here. I can mark it out. So this is the origin of this failed swing. That is to say, the order block is here, right? Now, price rallied down, retraced back, but failed to take off this low. Instead, price stopped here, traded through this order block, right? Traded through it, retraced back, probably into a fair value gap, and continued an upward movement. So the price failed to take off this low, right? Instead, it stopped here, took off the origin of this failed swing, then traded through it, pushed back into it, and this served as a support for it to now rally up in the opposite direction. And this is the bullish mitigation block. For the bearish mitigation block, this is a case whereby after the incident, price started trading down. You should know that for the bullish mitigation block, after the crossing of this block, which makes it automatically a mitigation block, price started trading upward. Now for the bearish mitigation block, after the incident occurs, you have to see price start pushing downward. So let's give the illustration for bearish mitigation block. This is the case whereby price pushed up, retraced down, but instead of taking this old high as with the breaker block, taking off this old high, right, it didn't. Instead, it stopped halfway, right? It was mitigated at this level. It stopped halfway. Now the other block, that is the origin of this failed swing, is here, right? So I'll just mark it out. The origin of the failed swing is here. So you notice that immediately price trades through this origin, the other block, immediately price trades through it and start pushing down. This serves automatically. This becomes the mitigation block, right? So price trade through the block, push up, and this automatically serve as a resistance level, then starts to push downward, and this is a bearish mitigation block. Notice that for a breaker block, this swing would have broke through this low, right? And also for a breaker block, the mitigation block here would have broken through this high, but it didn't. In the case of a mitigation block, it stopped this way, right, and traded through the block and traded through this other block, then continued to push price upward, creating a support at that level. And the same thing applies here, whereby it fails to take off this high, right? Instead it pushed downward, automatically making this a mitigation block and start to serve as a resistance level, pushing price downward. So let's go to the chart to show you illustrations for better understanding. So guys, this is a setup. This is a setup from here. You notice that this swing, this price movement has been in the upward direction. Let me go back so we can see this. Remember I told you that immediately after mitigation, something happens. The price starts to trend in opposite direction. Now this is the high. This is the high. This is the higher high, right? You can notice that this price movement is in it's trending, right, in the bullish direction. It's riding up. This is a high. This is a higher high, right? So let's move towards that direction from here. You can see this high from here is also higher than this, but should use my trend line. This high from here is also higher than this one, but use my trend line to show you that this is in an uptrend direction. This high is kind of higher than this, right? So it kept on creating higher highs and higher low as associated with an uptrend. Now at this point something happened because we are in an uptrend, so it rallied up, retraced back, but failed to take off this high, right? Guys, do you see what I'm seeing from here? Can you see it? Can you spot it? It rallied up. This is a high, this is a higher high, this retraced back, this swing would have taken off this high, right, to continue its upward direction. You understand? But it didn't. It just stopped here. I think into a fair value gap. Okay, there is no fair value gap from here. But it just stopped this way. Right? Retraced down, rallied a bit, then declined. Right? Let me use this trend line to illustrate it. This is a high, this is a high, higher high, upward direction. It rallied from here into this direction, retraced into this low, right? Now rallied up again, but failed to take off this high as in the upward direction. It failed to do so. Instead, it stopped this way. It was mitigated around this level, as you can see. So it failed to take off this level. Instead, it was mitigated around this place, right? Now for this swing, let me remove this to avoid confusion. For this swing, for this bullish swing, you know that this last down candle is the origin of the swing, right? Let me remove this. For this upward swing, this last down candle is the origin of the swing, and that is the origin of the failed mitigation block, right? So I can so I can mark it out. I can mark the whole of that candle using both the wick, right? Remember, in an uptrend, it continued upward, retraced back. In this case, failed to hit off this high. It now traced down, breaking off this other block, which automatically now serves as a mitigation block. Actually down from here, right? It's kind of consolidated from here, right? It didn't test that level again before it started pushing price downward. Yeah, kind of consolidated from here. Let's look at what the chart did, then aggressively rallied down. Here you can see, because it started creating lower lows to show you that this uptrend, that was the end of the uptrend from that mitigation block. That was the end of the uptrend. As you can see from here, it started creating lower lows and lower high, right? Started creating lower lows and changed direction into bearish movement and aggressively rallied down from here. So see. So let me locate another example. So guys, from here, can you identify anything? If you cannot, I'm going to show you in a jiffy. Now let's move back into the chart. This is a downtrend. From here, it's a downtrend. It was creating lower lows and lower high. This low is lower than this. This high is lower than this. So it was just creating down, it's in a downward movement, right? This high could not take off this high, so it's in the down movement, right? Lower lows, right? Now at this point, something happened. Something happened at this point. Remember, the price was trading in a bearish direction, and whenever the occurrence of mitigation block happens, price tends to start putting its candle in the opposite direction, right? So from here, price was retracing down, right? So I'm going to use this again. From here, it retraced down, from here, rallied up. From here, it retraced down, but could not take off this low to continue its downward movement. It didn't take off this, instead, it was mitigated at this point, right? Now, where is the origin of this mitigation swing? Where is the bearish order block? Let me get this way. This is a swing, right? The failed mitigation swing. Of course, this should be the last up candle from here. The highest up candle, the last green candle here is the bearish order block. So I'm going to mark it out. That is the origin of the swing, right? That's the origin of the swing. That's correct. I'm marking the full body and the wick. I'm going to bring this illustration back. Now, price rallied up from here, but failed to take off this low to continue its downward bearish movement, right? And what happened? It retraces upward, breaking this order block, right? It broke through that order block. You can see the momentum of this green candle. It was very aggressive, broke through the order block and automatically making this order block a mitigation block. And you can see what price did from here. This is a perfect example. More than the first one I just demonstrated with you. It retraced down into that order block. It tapped into it, right, giving an indication that price is going the opposite direction, and it actually did so, right? When it retraced down, it now serve as what is support, and this price rallied up and continue in an upward direction. So guys, this is how you can identify mitigation block and charts. Maybe in my subsequent video, I can now explain the difference between the mitigation block and breaker block, and also give you a perfect example on how you can trade the breaker block and the mitigation block. Thank you for watching. Please do subscribe to the channel and turn on the notification button. Please don't forget to give this video a like if you actually understand the video, right? Thank you for watching. See you in the next one.